All right, our featured guest speaker today, Carolyn Veroden. She's going to be presenting Intro to Advanced Fibonacci Time and Price Analysis. Carolyn is a commodity trading advisor, a technical analyst that has been involved in the trading industry for over 20 years. Her backgrounds include working on major trading floors, including the CME, the CBOT, the NYFE, and the COMEX. She's taught a segment of the Chicago Commodity Boot Camp seminars for 4 years on advanced trading techniques using the Fibonacci ratios on both time and price axis of the markets. She's also lectured for the Market Technicians Association, trademarkets.com, and the International Traders Expo on technique. She currently runs an intraday trading advisory service online based on her unique Fibonacci time and price analysis. That's www.fibonacciqueen.com. Ladies and gentlemen, would you please welcome Carol Veroden. Carolyn, how are you?
I'm good, thank you. Can you hear me okay?
Yeah, sounds good. You're coming in very good here right now. Just to give our recruits, guests, and traders a little insight here, what we're going to do is we have a visual presentation for Carolyn. We'll put the link up here. And also, after she is done, we'll have questions and answers in the lounge, but please wait until we open it up for questions and answers. And, well, Carolyn, very nice to have you here. We have a lot of people interested in the Fibonacci period. So this is going to be something that we really haven't touched base on, and we're very happy to have you here. And I'm going to hand you the mic and give you center stage, and all you.
Okay, thank you. Actually, before I start the PowerPoint presentation, I figured I'd just show you one of the setups that we're currently looking at for anybody who trades NASDAQ futures. And all I'm showing here is decisions on both sides of the market that are calculated, using the Fibonacci price relationships. As far as the trend on this 30-minute chart, we're looking at a general pattern of higher highs and higher lows, so I'm still going to set up some support decisions for possible buy entries, and right now that decision is the 28.18 to 22 area. That's support. But then you take it to the next decision, which is the resistance that's been calculated from these prior minor swings, and this is where it becomes an important crossroads, because if this support decision is any good, then we need to clear this. Actually, we've cleared 29 already, but the 28.30 to 33 area, which is what's left of that resistance decision, if that does occur, then the target for the trade actually comes in way above the market at this 28.63 area. Now, if we end up failing to clear this resistance instead, that's when you look for a failure and a rollover, and then the target would become an extension on the downside. Now, I don't expect a lot of that to make sense to everybody just yet, but I just wanted to give you an idea of what a live setup looks like. So it's taking this from one decision to the next. If we can clear it, great. If we have to look for an extension to the downside rather than a continued rally from that support. All right, so let's get started with the presentation here. What I do every single day is I look for one of three setups using the Fibonacci ratios. Okay, the first is what I call a Fibonacci price cluster, which is the coincidence of at least three or more price relationships within a relatively tight range. And these clusters will identify key support and resistance decisions. Okay, so that's the first. The second is what I call a symmetry setup. Now, symmetry is pretty much a measured move. It's defined as the similarity or equality of swings in the same direction. Now, don't worry that that doesn't make sense just yet, because I am going to show you a picture of it. And then the third type of setup that I look for is what I call a two-step pattern, which is a variation of a price cluster trade, because you're still going to have the coincidence of at least three price relationships that come together within a relatively tight range. But it's going to be within the context of a zigzag pattern, and some of you may have also heard of this as a Gartley pattern, for example. Okay, so first, what I want to do is just go over a few of the basics here. As far as the price relationships that we're using to do the analysis, okay, they are based on the ratios derived from the Fibonacci number series. And with the ratios, I'm going to run retracements of prior highs to lows or lows to highs using the first set of ratios, 382, 50%, 618, and 786. Occasionally, I will use 0.236 if it's a really large swing. Then I'm going to run price extensions, which are essentially retracements beyond 100%. And that's where I'm still going to be using 2 points on the chart, either a prior high to low or low to high swing. And I'm going to use the ratios of 1.272 and 1.618, and occasionally 2.618. And then I'm going to run price projections. Now, projections are calculated using 3 different points on the charts. That's where I'd be taking a prior high to low swing and then projecting from a third point another high, or projecting a prior low to high swing and then projecting from a new low. Now, I'm always using 100% when I run these, and occasionally I will use 1.618. Basically, running all possible price relationships on a particular chart is what's going to give us the setups that I talked about. The price cluster setups, the symmetry setups, or the two-step pattern setups. And then when we find a setup, what you need to see before you take a trade against it is a trigger. Okay, now some people might use it without. I don't recommend it because there are a ton of zones that the market will blow through every single day, and the triggers will help you filter out the setups that are probably not going to work versus the ones that are likely to pay you. Okay, so that's what you want to see. Now, I do have on the main page of my site for anybody to download. It says underneath the book, it'll say guidelines to using the levels and triggers for trade setups, or how to make money with the work. You can download that. It's about I don't know if it's a 10, 11-page document, and it will describe the triggers and what you would actually use to get involved in a trade setup. Okay, so again, just a few of the simple setups before I get into the good slides here. We have basic Fibonacci price retracements, which most people should be familiar with. That's where you're going to take the prior low to high and run the retracement ratios for possible support, or you're going to take a prior high to low swing and then run the retracement ratios for possible resistance. As far as extensions, you'll take a prior low to high swing and extend 1272 and 1618 most of the time, looking for possible support, or you'll run prior high to low swings using those same ratios, looking for possible resistance. And then as far as the price projections, okay, for resistance, you'll take prior low to high swings and then project from another low, or we'll take a prior high to low swing and project from another high. Okay, so you're going to be running all possible price relationships. You're not just going to run one single retracement decision and then use that for a trade setup. What we're looking for is the confluence of price relationships most of all, or a symmetry setup can actually just use one projection, because those are powerful by themselves. And I will give you some good examples of that. All right, as far as, I'm just going to start with a few of the recent examples just to give you an idea of what we look for. Now, this daily chart in the S&P, you can see that at this last low, there was the confluence of a 236 retracement, a 1272 extension of another swing, and a 100% projection of a prior decline. Okay, that's where the 1529.75 to 1531.25 area came in. So once that area held, what you would want to do to decide whether or not you take an entry against the support, because obviously it could have just kept going lower, is you would go down to a lower time frame chart, maybe a 15-minute chart, maybe a 30-minute chart, and see if it shifts pattern and triggers an entry for you, which would tell you that it's worth placing a bet against this support decision. So this obviously did occur because we hit, we held, we're starting to see, or we've seen a nice rally so far. And as far as targets for any of the trade setups, the trend trade setups, okay, what you always look at for the targets are going to be the 1272 extension of the swing into the trade setup zone. So in this case, that would be 1609, or just call it 1610, okay? Target 2 is always going to be the 1618 extension, so that would be at the 1631 area. And target number 3 would be the 2618 extension, which you can't actually see on this chart. The only thing, or the only place where we're having trouble on this particular time frame is if you, I'm not sure if you can see my arrow, but if you measured the prior low to high swing and projected 100% of that from the April 18th low, it shows you that we have a hurdle here at 1590 and a half. Now we've fallen a little bit short of that, but that is an important decision that would need to be cleared if we're going to, resume the rally and then head up towards that target. And also, this is a little bit of an old snapshot. I took this yesterday, so it does not include today's data on it. Okay, so that's the S&P. I also wanted to give you a peek at the bigger picture in the S&P. Now, a lot of people are just trading for, scalping or day trading, and this may not matter a whole lot to them. But if you're looking at the bigger picture and what's possible, you should look at the monthly charts and the weekly charts. Now, if we hold above, well, I mean, it looks like we're going to hold above this 09 low. The target off of this swing is all the way up to this 1823 area. So everybody that's saying, this market's too high, it can't go higher, it's overbought, it's overdone, well, not necessarily by looking at the bigger picture. There are going to be some other resistance decisions on the way up, but the bigger picture target does point to potentially much higher prices. And it doesn't mean that you just buy the market, don't place a stop, and assume that it's going to go there. You can't do it that way. Because if you look at the last time that we rallied off of an important low, like the 02 low, you only made a slightly new high. This is where people would have been expecting the market to continue to extend, and instead we saw a horrendous decline. So in this case, you didn't see the follow-through. All right, let's take a look at, okay, one of the other things that I do with this work is that I also apply the same ratios that I use on the price axis of the market to the time axis of the market. And I thought this would be interesting because we are basically in another time window to watch for a potential reversal, okay? When you get a clustering of time cycles, similar to the way that you see a clustering of price, you look for a possible change in trend. And if the trend is up into it, you're going to look for a reversal to back down. And notice that we had one cycle that came in today on the 26th, but you have a nice coincidence of cycles that come anywhere between May 2nd through the 7th. And you know what they talk about as far as, sell in May and go away. So you want to be aware of these cycles just in case it does put a damper on the market. Okay, I'm not trying to call a major top here or anything. I'm just trying to, give a heads up and something that you can watch, because if you were long the S&P, you definitely want to be aware of these cycles if it could terminate this rally. This next chart is a 30-minute chart in the S&P, and it's a recent example. I just took a snapshot to give you an idea of, what you can accomplish with this. And this was a 30-minute chart where we ended up having, well, this little crazy day here, but a nice confluence of price relationships that came in between this 1569 to 1570, 75 area. It was tested twice, actually. Okay, so made the low at the same level, so a little double bottom there. And two targets on the upside were met off of this setup. Now, it's not always going to work this way. It won't always be perfect. There are going to definitely be trade setups where you buy it and you get stopped out. But the good news about using this type of analysis is that your risk is extremely well defined, because if we couldn't hold above this zone, you would be out of the trade as soon as it broke underneath it. Okay, so it didn't make 3 targets, but it did make 2 targets, and that was a 17.5 point rally off of a couple of symmetry projections that overlapped. It looks like 1 retracement and 2 other extensions. Okay, now I can kind of tell what the price relationships are because I color code them. So I know that green's an extension, red are symmetry projections, and blue is a basic retracement. Okay, I realize that not a lot of people are trading stocks in here, but this can be applied to pretty much anything: forex, stocks, and the indexes and futures. But one of the things I want to show you is symmetry. Okay, now I talked about symmetry being similarity or equality when comparing swings in the same direction. So in looking at this daily chart of Apple, you can see that the larger general pattern is a bearish pattern. So to give you an example of an old symmetry setup, before I give you a new one, if you took all of these prior rally swings that were, see, this first one was $49.07, another similar one was $53.77, another one was $49.94, and if you projected those from the low that was made on March 4th, okay, you were going to have this resistance that Apple ended up slamming into. Now, there were some lower areas or some resistance that came in a little bit lower than this, but bottom line, we did not clear what I consider the bearish symmetry of this swing. So at that point, this was a sell setup in Apple. So all you needed to do at that point was to look for a sell trigger, something that told you that it was worth placing a bet against this resistance decision. And typically we do go down to a lower time frame chart. For example, for a swing trade, 30-minute charts typically good. Okay, so here I'm sure we did see that crossover on a 30-minute chart and an indication that it was okay to place a bet against this area. And if you remember what I said earlier, targets are typically 1272 and then 1618 and then 2618, and you can see that we made 2 targets to the downside in Apple before we started to bounce. So with that being said, the next setup that makes sense to me includes these same projections, where I'm going to take these prior rallies anywhere between $49 to $53 and project them from the recent low. And this means I have an area to stock at 434.17 to 438.87. So if Apple gets up there, that's when I'll go down to the lower time frame chart and see if it triggers a short or not. Okay, this, I don't have the current chart on this. This was a good setup. If you keep track of what's going on with earnings and everything else, Amazon has fallen apart today. But this is an example of a trade setup that didn't quite play out fully. Okay, so here's where we had a confluence. Again, you want to look for not just a single level, but a confluence of multiple relationships. And this one had 8 to 10 that came in between the 247.79 to 252.03 area. Okay, and not only did it have the confluence of price relationships, you can see that there was also a confluence of timing relationships that came in, looks like the 25th through the 27th. Now, the 25th was a Monday. I believe the actual low was made on the Friday. Okay, so just one trading day before this grouping of cycles. So this is what I call, pretty much an ideal setup. You have time and price parameters that came together to tell you to look at the buy side in Amazon. Now, I guess after earnings, after hours, we did see a spike up to the 290 area, which is close to what would have been my target. But now that this one is falling apart, that trade's pretty much over, unless we end up retesting this old support and we re-trigger on the buy side. I'm going to give you another example of symmetry and what I look for. Again, symmetry, similarity, or equality when comparing swings in the same direction. Okay. Now, this is a really good example in IBM. Now, after earnings, IBM plummeted. So the first thing I did was back it up and go back to the weekly chart, because I've been following this one for quite some time and knew that there have been many declines that were 27, 28 bucks in IBM on the weekly chart. So I basically applied 100% of those prior declines from the most recent high and came up with this new support level, which has ended up holding so far. So already there were day trades against this zone. I believe there might already be a swing trade trigger in this one. And if it plays out fully, it has some pretty healthy upside potential to this 223 area. But there are going to be areas on the way up that I'm going to watch for possible failure. And actually, I don't have it on this chart, but it's somewhere around the 205 area. Also, just to give you an idea of what I showed you earlier, this is what's happening with the NASDAQ as far as taking it from one decision to the next. So on some time frame, maybe it's a tick chart, you know that we've triggered a long against this 28.18 to 22 area. Now, if it continues to rally beyond this 33 area, the odds increase for a continued rally, again, towards this extension on the upside. So if it's going to fail, this is the area. So let's say, for example, if somebody bought against this support and it can't get through this resistance, they might dump the position. But if it continues to rally, or actually besides just dumping, you could just trail the stops up and see if the market kicks you out. And then, we'll want to see if we can really get a decided move above this 33 area. And that's when it starts to look a whole lot better. All right, let's go back to the slides here. Okay, so that is price parameters. There's a little bit of a shortcut on this chart, though, because there is a histogram that will actually illustrate a clustering of timing cycles when they come together. So that's pretty much what this pink line represents, a grouping of time cycles that came together at the same time that you tested a key support decision within an uptrend in AIG. Now this one has made two targets to the upside already. This is the point where I believe this one would have been stopped out with a trailing stop this morning, and then we would set it up again as long as the larger bullish pattern remained intact. But let me give you an idea of what a trigger would have looked like in this case. So this should be the next, okay. Here, you want to go down to a lower time frame chart to trigger an entry against a daily setup, for example, because you want to get triggered into the trade as close to the price zone, which defines your risk, as you can. And if you waited for a signal on a daily chart, forget about it. You know, trade's going to be half over by the time it gets signaled in. So here, we typically look at a 15-minute chart as an aggressive entry chart, or a 30-minute chart as kind of a normal chart for swing trade entry. What you want to see to indicate that it's worth placing a bet, if you look at the left-hand side of the chart, you can see the general pattern of lower lows and lower highs. Well, you want to see that shift by it taking out a prior swing high, which it did. This is where the first arrow on the left is showing you a prior swing high that was taken out. And then you also want to see moving average crossover, which on the lower time frame charts I use an 8 and 34 EMA to confirm. So I want to see both the prior swing high taken out, or a prior swing high, and the moving average crossover to signal an entry. So that's an example of a trigger against a daily support zone. Okay, this next example is in TLT. Just to give you an idea of how symmetry, which is such a simple concept, you know, measure, move, if you want to call it that, but it's very powerful. In this example, if you look at this prior low to high swing, you can see I've circled how long that took. It was $7.20, and it took 11 trading days. Okay, so then when we started seeing another rally, I started comparing those swings, and if you ran the projection of 720 from the low that was made on the 14th of September, it would have given you 125.25 as a resistance decision. In this case, the actual high was made at 125.24, which was $7.19 versus 720. When you hit something like that, you definitely want to watch it as a decision point, because if it holds underneath it, you definitely want to look for your sell triggers. Now, we did not get a full target off of that as a trade setup, but it was tradable. So you can see that in this case, not only did we have the symmetry or similarity in price of these swings to identify this as a trade, you also had similarity in time. So when time and price parameters come together, it can be a very powerful decision in the market. So this was 11 trading days up versus 10 trading days up, and they were also similar in price. So that's when you know you have a pretty high probability setup. And also, you know when you're wrong pretty quickly if it comes through here, that last high. I'll show you a recent example of that. We just had this occur in TLT again. And let's see. We had a prior rally swing. It was not similar in time, but similar in price, $9.14. As far as a rally here, $9.17. Okay, so you knew this was potential resistance. It went through it by 3 cents. Now, initially, we did see a decline off of here. I'd have to go back to the current chart to see if we are actually close to taking that out at this point. Okay, if we do take it out, that votes for a continued rally. Okay, so we did have a failure and a little bit of a, you know, a nice little short-term short against this area. But now if it comes back through it, you'd be stopped out of the short side. Well, actually, hopefully you'd be stopped out before you take that out if you use a trailing stop. And then it also tells you that since we're clearing the bearish symmetry of this swing down, that you shouldn't be surprised if we just continue then to rally, because this becomes kind of a make or break decision point. So coming through it gets you to start looking at the other side instead. This next example is a trade setup in Costco. This is where time symmetry is very clear And if you find this in the market, because you can even find this on the intraday charts, okay, you'll notice where you get a correction and it's 19 bars on the 15-minute chart or something like that, and then the next correction is very similar, like 19 or 20 bars. You should pay attention to that because it's giving you an important decision. So here, in this example, I basically monitor the time of prior swings. Now, I would also monitor these smaller swings, but at this point, this was what was most important. We had a 24 trading day decline, another 24 trading day decline, and then we were 25 trading days down, which is very similar to 24, as we were testing key support in the market. And then this was followed with buy triggers in Costco. Target 1 was met. This is a really old chart, so I'm not even sure if we met target 2, but I know that we at least met target 1 on this setup. That's typically what you look for. And also, when you get to target 1, it's a really good time to really tighten up your stops. Okay, now let's check out a few more here, and then I'll see about taking some questions. There are things that you can see by applying this work that a lot of other people will not see. So in this example of S&P cash, okay, this was a price cluster setup. We had anywhere from 1259.40 to 1266.44 as far as possible support. And one of the most important projections within that came from symmetry, one of these prior declines, because you can see there was a prior decline that was 155.94. If you projected that from the April 2nd high, you can see the red line in there. That's where the red line came in. Okay, so you compare where it made the low. You had a 155.94 point swing compared to 155.64. Okay, so symmetry, similarity. It wasn't exactly perfect, but it was similar. Okay, so, or it wasn't equality, but it was very similar. And it was similar enough to watch for this decline from the April 2nd high to terminate. Okay, and then this, as far as the targets, this is an old, an old chart example, but we did make the first target, and this is the way I found that target, by just running the 1272 extension, which came in at the 1464 handle. So we met that target and then some. Oh, also besides the, and I guess you guys can have a copy of this, the presentation. You can go back and check if you have a program that will allow you to use the time cycles, and you'll find that there was also a nice cluster of timing cycles between, it looks like June 5th through the 8th. Actual low was made on June 4th. Enough. I looked at plus or minus a bar as far as the timing. So that was considered to be within the time zone. This next example is where the most recent low was made in November. And again, you know, if you just look at a chart and you don't have these labels on it, you may not see this. If you look at this prior decline, it was 43 trading days. And then if you look at the decline into the November low, it was also 43 trading days. Besides that, the swing into that low was very similar to a prior swing of 134. This was 131.16 as far as a price projection. And then besides that, we also had it overlap a 618 retracement of the June 4th low to the September 14th high. That's where the 1346 area came in. And not only did you have the 100% time projection, you also had 618 in both price and time of this prior swing, because if you measured the time of the June 4th low to the September 14th high multiplied by 618, you can see where basically it was within one day. These pink lines intersected. So this was what they call squaring of price and time. So that's what defined this as an important low, and we've already made two targets to the upside. This is just, a good example of a failure. Obviously, a lot of these zones are violated every single day. This is why we use the triggers or the filters before getting involved in any of them. Okay, so in this example, you can see where we did see an initial bounce off of this area, but guess what? Once you blew through the support, you'd be stopped out. The good news is that the risk reward is usually pretty good as far as what a target would be versus what you're risking on the actual trade setup. All right, I think I'll go through this. This example in Monsanto on a weekly chart is pretty interesting because, again, I found similarity. Now, it's not always swing per swing, okay? The market would be boring if it was that way. But if you look at this every other swing, it was pretty interesting because we had one swing that was 9 weeks down versus another that was 10 weeks down. And then we also had a swing that was 15 weeks down versus where we ended up making this last low 15 weeks down. And it also was very similar in price to a prior decline. So here you can see that from February of 11, you had a 15-week decline that was $14.39. And then into the next low, you had a 15-week decline that was $14, 14 and a quarter. Very similar in price. Okay, so these are the parameters that I watch to develop trade setups, and that ended up being the actual result in Monsanto. Now, it took a while before it started looking good on a daily chart, but sometimes when the short-term work can only tell you so much, you do want to back it up and look at the bigger picture. Because even though the daily chart was bearish as we moved into this support, the bigger picture on the weekly chart told you that it was worth watching for a termination of that decline and a renewed buy signal in Monsanto. Okay, I think I just have one more example and then I'll take questions if you have. I wanted to have at least one example in here of a two-step pattern or zigzag. This is actual zigzag. Hopefully you can kind of see my mouse here, but what you do here is you look for a confluence of three price relationships within this zigzag pattern. You're basically looking for a move that's correcting a prior trend swing, and then after a zigzag for that trend to resume. So in this case, what I did was I took a prior high to low swing, and you can see that there was a 618 retracement that came in at 77.48. Then I also measured 100% of the first swing up and projected it from the low on April 10th. And that gave you the top level, the 78.34. And then also, if you took the extension of the April 2nd high to the April 10th low, that extension came in just below that other projection. So this gave you a zigzag or two-step pattern sell setup in Joy on the daily chart with these three price relationships. And you knew that if we ended up holding underneath this area, you wanted to look for sell triggers and look for the the decline in this case to resume. And that's what ended up happening in this case. Now, I could show you, I do try and post some of the other ones on Twitter, the ones that don't work. There's plenty of them that, the market just blows right through. But this is for, example's sake. You had the zigzag, and then you met two targets to the downside. Enjoy. And like I said, I'm not trying to say that every single setup works like all of these, storybook pictures in here, but they work often enough, and you will get involved in the best ones if you use triggers to filter your entries. So I think that is my last slide, and if you want to filter some questions through, I'll see if I can answer them.
All right, Carolyn, thank you very much for the presentation. We do have some questions here in the lounge. We're going to start it out. Fred Duggar's got a question. You talk about time and price. Will these patterns appear on multiple time frames? And is it helpful to look at multiple time frames for confirmation of patterns?
Time and price will show up on multiple time frames, but like for different degree decisions. So for example, or I have that confluence of cycles in the beginning of May. That's for a potential intermediate high on the daily chart. Well, this morning I had time cycles along with price on a 30-minute chart for a short-term low, and we've seen that so far. It's bounced off of that time and price decision, yet it has not cleared its resistance. So you can, or you will find different time and price decisions on different time frames. It just depends on, how fine-tuned you want your work to be. And as far as, I think, what was the end of that? As far as overlapping the time frames, I usually like to try and set something up on a daily chart and then fine-tune an entry using the lower time frame charts. So if you can get confluence that way, that's I think that's a good way to look at it.
All right, thank you. Next question is from 999. Where does the 1.272 extension ratio derive from, and where does the 0.236 retracement ratio derive from?
Well, I know the 1272 is the square root of 1618, and as far as 236, I have that written up in my book. I don't remember it offhand, but there's there's a number of different slides that I usually go through that'll show you where they're calculated from, but they're all related for sure. I would have to go look up the 236 though.
Okay, that's fine. Thank you. Next question. Where would you recommend a person who is new to these patterns start looking for them? Is there a particular product or time frame that is easier to read?
Well, I guess it would really depend on what time frame you're interested in trading. I mean, if you want a day trade, you should probably, look at a 15-minute chart or something like that to create or identify setups. But if you are more interested in swing trading in the bigger picture, you might look at the daily chart. There are some charts that are just not going to set up well, and you just have to, kind of ignore those. I mean, let's see if I can grab that. I have to find, okay, this was the wrong workspace. Okay, so for example, price line. I don't have a setup. I didn't have a setup at these last lows. I don't have a setup here on the daily chart either. I might if I went down to an intraday chart. But for example, on this particular chart, I don't have a setup unless we zigzag down into support. You don't want to force trades. There are so many different setups. I mean, you can see that this stuff, you'll see patterns repeat over and over and over again. I guess if you want to just get your feet wet, maybe look at a daily chart. Okay, this is an old, okay, here we have Google. Yeah, I mean, you're going to see setups all of the time. We had resistance that we came just short of, for example, in Google, this 819, 826 area. That's what we rolled over from. But on a lower time frame chart, I'm actually setting up the buy side in Google. Okay, so now that we've come off of that resistance, since I like Google in the bigger picture, I'm looking at one of these two zones for now, a buy entry there. So a lot of this, or how you use this work, is going to depend on the time frame that you're trading. Because one person can say, Google's in a downtrend. Okay, well, yeah, if you're looking at this most recent data, it's in a downtrend. And then the other person can say, oh, it's in an uptrend. Well, both people can be right because it's dependent on what data set you're looking at. Okay, because on this, you know, if you look at more data, this is still a bullish pattern. If you look at the daily chart, that's still a bullish pattern. If you look at the short-term stuff from the last high, not so bullish. So you have to know your time frame.
Okay. All right, next question is from Sheila. Sheila has a question. How do you define a cluster? I replicated your fib lines on Apple daily, and it's not clear where the clusters are.
Well, the definition of a cluster is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So I'll just show you. If you take in the major swings, okay, I'm going to run a projection from the low to the high. I'm going to use these major prior rally swings. I'm not going to use this big one because that's way above the market. So if you ran all of those 100% projections from the recent low, can you see where they're overlapping? They're overlapping. And then there's also, that's just symmetry. And then there's also a 618 that overlaps. That's why this is my zone that I talked about. 434, 438 area. And also everything, I know that, you know, cramming what I do into a, 45-minute presentation has got to be relatively confusing. So, the book, we don't make a lot of money on the books, but it's awesome as far as referring back to the book for, the setups that I'm creating, all the definitions, how to run the retracements, the extensions, and the projections. And then it might start to make a bit more sense if you like what you've seen so far.
Okay, thank you. Next question's from Rod. What are the names used for the time cycle instrument you are using for the time project? I want to see if I could find them on Sierra charts. Thank you.
I don't know what they call them on Sierra charts. I know what they call them, in Dynamic Trader. These are the time projection tools that I use from 2 points. And then there's time projection tools from 3 points. Now, I know they're on Thinkorswim. I know I'm pretty sure that both are on NinjaTrader. I know nothing about Sierra charts. So you would just have to ask them if they have a Fibonacci timing tool where you can run the ratios. So, for example, if you measure a high to a high and then project forward in time, will these ratios show up on the chart or not? Because they may have some sort of timing tool, but it might not be the same thing. So you'd actually have to ask Sierra.
All right. Thank you, Carolyn. Still got a little time here. Zephyr has a question regarding the triggers. Can you provide a link to the triggers, please? Is that available? You can get a link to those?
Yeah, it's you just go right on the website FibonacciQueen.com. You see right here it says click here to view the guidelines on how to make money using the updates, right? So I can give you this separate link. I don't know how to put it into the room, so I'm going to give it to you on Skype.
Okay, sure, and then
you can share that.
Okay, great. All right, thank you. Next question. Oh, we got another question from Sheila here. Sheila says, are you using the Elliott wave principle to define highs and lows or zigzags?
Not really. I mean, I know that if I see, that a zigzag pattern is one of the Elliott wave patterns, but I pretty much ignore the counts and all that. I just eyeball it as far as the swing highs and lows that I'm going to use. I look at what would be running the price relationships that would be relevant to the current market. I choose the swings with that in mind. So no, I'm not really using the Elliott wave stuff, though. Sometimes you'll see a 5-wave pattern into time and price. Great if it happens that way, but I don't try and look at the pattern, number it, and then change the or label it and then change the labels. That drives me crazy.
Okay. All right. High Seven's got a question. The question is, how can I get your time cycle histogram? Would I need the dynamic trader software?
For this histogram, yes. I don't see it on. There are other ones like Advanced Get. I think has some sort of a histogram on it. But yeah, I don't. Besides that, I'm not sure what else has it.
Okay. A couple more questions here. James Bond has a question. Do you use harmonic patterns?
If that's if he means like what Larry Pesavento calls harmonics, which I think that's basically symmetry. I think that's like where you're measuring the swings and basically the amount of the prior swings. I mean, similar to what I showed you here in or the prior chart of Apple. I don't know if that's what you mean by harmonics, but that might be what was in Larry Pesavento's book. I used to work with him on the floor down there way back when.
Okay, and last question here. This is from Penstock. What moving averages are you using?
All of that information is on the guidelines sheet that you can download, but on the daily charts, I'm using a 250 simple. And then I'm also using a 5 and 13 EMA. But as far as the trigger charts, 30-minute, 15-minute, any of the intraday charts, it's an 8 and 34 EMA. And I look for a crossover using that.
All right. Well, Carolyn, I appreciate you being with us today. Carolyn Borodin, and her topic, the advanced Fibonacci time and price analysis. Now, this was a topic that we have not touched base on. I know a lot of our recruits, traders, funded traders, they do use that. We do talk about it a lot, but with the explanation, I do appreciate you being with us here today. And I do have the, you did give me the website, and we'll pass it on to everybody. Everybody want to check it out and might be interested in hooking up here with the Fibonacci Queen. So I like that. That's a great name, Fibonacci Queen.
Yeah.
But no, you've been on the trading floor. You were on the CME.
Yeah.
As I said, we probably bumped shoulders at one point. But just being from the old school of floor trading and coming onto the screen trade, what can you say about that? I mean, was it a easy move into it, or I mean, because it's like two different worlds?
Well, for me, I was not a pit trader. I basically managed a floor operation, so I wasn't inside the pit and trading. I was getting orders executed for like institutional clients. But as far as trading a feel on the floor versus trading a visual pattern, I could see where it can be a little bit difficult to shift over. But what you basically have to do is learn a new system. You have to learn how to do this type of analysis, and then follow the rules as far as entry and all that good stuff, because you're not going to have the pit sense. So you need something else to define what your risk is, and also to give you what your potential targets are and all that good stuff.
All right, fantastic. Well, we want to wish you a very nice weekend. Once again, thank you for the sharing of your knowledge. I know you put a smile on a lot of people's faces here, and you have, because this is something that is talked about a lot. Some people don't understand it too much, but a fantastic presentation, and hope to have you back again here very soon.
Well, thank you. And also, there are some free charts that I post on Twitter that you can go back and see if you can replicate them. And there's also some free videos on my site in that section that talks a little bit about triggers and also some of the recent setups.
Fantastic. We'll share those. All right. Well,
all right. Thanks.
Have a good weekend. Take care.
You too. Bye.